The New Year's rally continued today as the market gapped up this morning. SPY closed up 0.66%, just below the 596 level. We did see a rejection here around midday, just below the 600 strike. If you recall from yesterday's video, that was our kind of line in the sand. We need to see a move above 600 to know that momentum is back in the market and we have a better shot at testing all-time highs. But seeing a rejection as we approach the 600 strike is not surprising. We are in our upper dealer cluster zone here on the SPY. There's also some slight resistance here in this down trend line. So what we want to look for, of course, is gamma exposure growing at these higher strikes as well as volume coming in at these higher strikes. So we didn't really get much volume above the 600 strike today, as notated by these blue bars. And that's going to be one of the key indications as the week progresses to see whether or not we have enough momentum to get back above the 600 level. If you recall from last night's video, as well as several videos last week, we talked about the support zone that was sitting just above the 580 level. We were deep into our lower dealer cluster zone. You can see how close these two dealer cluster zones are together. And this is, of course, part of what is causing this market congestion just below the 600 strike. Ultimately, though, that support held. We've got the bounce that we've seen over the last several trading sessions, and we are now solidly in positive gamma exposure territory as of today, back above the zero gamma exposure level.
Thanks, Anthony. The Dow and IWM continue to underperform during this recovery that we're seeing in the indices. The Dow may play catch up. Before this thing is over, I would guess that there's a pretty good chance that we see the Dow reach some of these higher levels, whether that's 436, even up to 460. So even if this thing comes down and retests this whole moving average at 425 or the lower Keltner channel at 424, I'm viewing this as a buying opportunity as long as we see this gamma picture intact. I did want to point out one last thing coming back over to the VIX, actually. The VIX on the daily chart is basically back at the middle Keltner channel. It's such a wide, this upper channel and the lower channel are so far apart. I've had better luck using the 2-hour chart when I'm looking at the VIX to give some sort of potential guideline for where the volatility may take this thing. So the VIX is below the hole at 16.5. It's below the middle Keltner channel on the 2-hour. And wouldn't be surprised to see the VIX hit 15 if the market has a little bit more juice in it to continue higher short term.
Thanks, Sean. Yeah, the Qs were leading the way today. It'll be interesting to see if IWM and DIA play catch up. Speaking of the Qs, I want to take a look at Nvidia that was in the spotlight today, up nearly 4%, breached the 150 strike that we have been discussing for the past several weeks. We've been discussing this in our videos since Nvidia was down here in the lower dealer cluster zone below 130. So really exciting to see the last several trading sessions, this big ramp up into the largest gamma exposure concentration at the 150 strike. This is why we use gamma exposure. It's not a crystal ball, but it does tell you where the focus is in the options market. And a lot of times price gravitates right into those large gamma exposure concentrations. That was certainly the case with Nvidia today. Big gap up, breached the 150 strike. This is, of course, our upper dealer cluster zone being the largest positive gamma exposure area. Oftentimes what happens in these upper dealer cluster zones is dealer selling pressure will kick in as dealers are having to sell shares of the underlying security in order to maintain a balanced book. And so it's part of their hedging strategy. So we saw some of that selling pressure here at the end of the day today in Nvidia, but still we saw big volume coming in at higher strikes. I mean, look at the size of this, over 400,000 contracts, both at the 155 strike and the 160 strike. So the most likely scenario is some continued pullback in Nvidia over the next several days, followed by a resumption of this uptrend, assuming that volume continues at these higher strikes and gamma exposure at these higher strikes. This is what we watch for in our playbook, especially as we come pressing up against these upper dealer cluster zones with what looks to be continued interest for higher strikes. And so we'll be looking for a similar setup in Nvidia. We currently have an existing position on, which we will probably begin locking in profits this week. And I'll be looking to add a new position if we do get this consolidation and perhaps a slight pullback filling in this gap that we saw from this morning. And you guys can follow all the action, our daily analysis, and our trade ideas in our community Discord. I'll put a link down in the description below.
Well, as you guys know, we've been talking about Bitcoin and the gamma that we saw concentrated at 100,000. We also, in our newsletter, we mentioned the gamma that we saw growing at 105 and 110. Pretty nice candle today. It got us all the way over the 100,000 mark to 102. And even though the pattern itself looks to be sort of like consolidation to me, kind of a sideways channel on the Keltners, the fact that we're above the hole, which is sloping upward, we're above the middle Keltner, and we have this upper Keltner channel basically at 109. To me, it looks like there's more upside ahead for Bitcoin. We still have very positive gamma, and we have 110 in focus, which is pretty close to that 109. We'll want to keep an eye on these higher strikes to see if gamma continues to grow at these areas, but the momentum is certainly to the upside with Bitcoin at the moment.
Thanks, Sean. Yeah, following on Bitcoin, I want to talk about MSTR. Big move today, up 11%, now trading just above 377 here in after hours. We mentioned last week in one of our videos, as we were trading down into this 300 zone, this is our lower dealer cluster zone, we discussed the binary possibility of a drastic move higher or lower. And oftentimes you get to these points in the market where there is uncertainty and it's a binary event. This is why people trade straddles in the options market. And this is exactly what we were referencing, a potential move back up to 400 or a move down to 200. At this point in time, the odds favored a bounce out of the lower dealer cluster zone. It didn't take long. MSTR is already approaching that 400 strike, as you can see. Largest gamma exposure concentration, and check out this volume, over 40,000 contracts traded at the 400 strike just today alone. So it looks like market participants are moving into the 400 strike. That is our upper dealer cluster zone. I would expect a little bit of consolidation or rejection around that 400 zone. Also, some have been asking, is it possible that MSTR could get back to the highs that we saw at the end of November, up around 500? I think that is a much lower probability. However, I will note that volume is coming in here today in the options market, nearly 30,000 contracts at that 500 strike. So these are primarily speculators and probably call sellers coming into the options market, but that is something to be aware of. If we continue to see interest at this 500 strike, this could be a potential target heading into the end of January. I personally wouldn't bet that it's going to reach that level, but it is worth noting that speculators are playing the 500 level. And just a reminder, our holiday special ends this week, $300 off our yearly portfolio manager tier subscription. Use code holidays at checkout. We do have a few spots left, but we are ending this promotion this week. You'll get access to our gamma exposure dashboard and our option flow analytics tools. You'll also get access to our premium channels in Discord. I'll put a link down in the description below where you guys can check that out as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.